All right, welcome back. Up now, we have Forum Daily's weekly market update with Catherine Murray, host of the Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing North American equity markets trade lower to the tune of about 1.5% to 2% this morning. This, of course, follows the U.S. Federal Reserve's comments yesterday in raising the rates by 50 basis points and also weaker than expected U.S. economic data. So let's break this down a little bit. We did hear from the U.S. Federal Reserve yesterday where they raised rates by 50 basis points, very much as anticipated by investors. And this does follow 4 rate hikes of 75 basis points. What was different and why the market sold off yesterday and continue to do so today is because U.S. Fed Chair Jerome Powell continued to be quite hawkish in his stance versus market expectations. He basically said they're going to continue to raise rates because they want to make sure that they've combated inflation. So it looks as though the rate to expect in 2023 is around 5.1%, yet the market still is anticipating a little bit lower, anywhere from about 4.75 to 5%. So not really believing the U.S. Federal Reserve, but they were very clear in their intention to continue to raise rates. Higher for longer should be your takeaway, but we'll see because the market is not believing that. We also had disappointing U.S. economic data out this morning on the manufacturing front. New York as well as Philly manufacturing data came in below expectations. And also retail sales was quite a bit weaker versus expectations. So in other words, perhaps the U.S. consumer, and likely the Canadian consumer as well, is already and have been feeling the impact of rising rates on their pocketbook. So taken together, the market is concerned about rising rates, a tightening balance sheet, and the impact that that's been having on the economy. Now, away from that, as we look at other areas of the market, we are seeing WTI down by about 1% today, but this follows a 2.5% rally yesterday. And we're also keeping our eyes on some stock-specific stories. Tesla is front and center. It turns out that Elon Musk has sold about $3.6 billion of Tesla stock, even though back in April, he indicated that there would not be any further sales. So that stock has been down by about 12.5% this week alone. We're also keeping our eyes on Verizon. It got an upgrade over at Morgan Stanley, in part based on valuation, sending that stock up by 2.5%, 2.3%. So certainly bucking the overall market trends. We also had an upgrade over at Piper Sandler of SBH, Sally Beauty Holdings, sending that stock up by about 2% as well. Keep your eyes on Nucor within the steel segment. Their fourth quarter guidance was below consensus. That stock's down by about 5%. I highlight that stock in the sense that it is somewhat representative, perhaps, of the industrial environment in terms of demand, et cetera. And also Lennar within the housing environment. Their new orders did come in light. Revenue beat in their quarter. They reported yesterday after the close, but the new orders are light. So that stock's down by about 1.7%. Now, as we look at the Canadian marketplace as well, TSX is down by about 1.6% right now. The ECB, I should point out, did raise rates by 50 basis points this morning. And we continue to hear from various central bankers, whether it's the Fed yesterday, the ECB, or the BOC, indicating that they're going to continue to raise rates. So the BOC, the Bank of Canada, they are going to be data dependent, but we have heard that they want to make sure that they combat inflation. So in other words, there's a risk to doing less. They're better off to do more. More means raising rates. Keep in mind as we think about this that we've already had about 400 basis points of increases thus far, clearly impacting the Canadian consumer. You do have reports out as well that the hike of about 400 basis points is impacting the debt to income level, which has moved higher, 183.3%. So that continues to move higher. In other words, people continue to feel the pain of higher interest rates. Importantly as well, when you think of higher interest rates and the impact on the housing environment and those looking to get a mortgage, we have also heard from OSFI that they are not going to make any changes to the mortgage stress test, but will continue to review them. So that's important if you're out there in the mortgage market. And lastly, just on the Canadian manufacturing front, we did see the manufacturing tick up a little bit for the September time period, up by about 2.8 billion, or coming in at 2.8 billion. So certainly a lot going on as it relates to the economic data, and all eyes really are focused on what we're hearing from company managements in terms of their outlook for 2023 and what they're baking in. Nima, a lot going on. I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, which airs on Sunday mornings at 9 a.m. Eastern only on the News Forum Network.